Hello, everyone, and welcome to another episode of the Daily Cardano Refuel, where we recap the latest news in the Cardano ecosystem. I'm your host, Charles Hodgkinson, and today is the 1st of April 2022. All right, everyone, let's get into it. All right, that's it about the news about the Cardano ecosystem. Thanks for checking in. Okay. Enough of the jokes, guys. It's April Fool's. Just a quick April Fool's joke there. I actually read a tweet from Hazu before saying all the Bitcoiner April Fool's jokes are about Ethereum and all the Ethereum April Fool's jokes are about Cardano. But I had this in mind all day, and before I saw that tweet, before I saw all the Cardano April Fool's jokes flying around, so I'm just going to, stay with that. I think it's quite funny, but yeah, I hope you guys got a kick out of that there. And you know what? I actually really hate April Fools in general. I think it's really silly. Even though I know it's April Fool's Day and I experience it twice because I experience it once in Australia and once in when America wakes up and when Europe wakes up. So it's just like a mess, like 48 hours of not being able to trust anything. That's why I kind of like really don't like I mean, it's not even a holiday, right? It's just like a gag, really. And there's a lot of jokes out there. But I always, not always, but sometimes I'll like look at it and be like, oh god, like I fell for it again, right? And there'll always be something that catches you. It's kind of, even as I said, even if you know it's April Fool's, there's always something that catches you. But anyway, I'm gonna move on from that. There's a bunch of updates to get through here, so I'm gonna go through them now. All right, just a quick shout out. I'll be doing a live stream with David Hoffman today. You can check out the link here. I'll link it in the YouTube description. This is our first live stream in a while, actually. So hopefully you can catch it. If you can't, you can obviously watch the recorded video once it's published on YouTube. Immediately after the live stream, hope to see you all there. All right, so there's this European regulation that I spoke about, I think, last week on the Refuel. I think it was maybe earlier this week. It was recently, but basically, Patrick Hansen here, who has been following this quite closely, put out a tweet yesterday, saying the Econ and LIBE committees of the EU Parliament voted in favor of this basically new regulation that would crack down on unhosted wallets, or I guess like non-custodial wallets. Entire regulation draft to be voted on later today, being later, I guess, on the when he tweeted this, but we'll certainly go through. And then he kind of breaks down what this is, who voted for, who voted against, blah, 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 all that sort of stuff there. So this is obviously not ideal. I think that the EU has a pretty bad history of voting against kind of like technologies and missing out on technologies. I've read a few people saying that the EU also missed out on the internet because they just like were really heavy-handed early on, and this seems to be following the kind of like pattern here with them doing this. Now, you can, as I said, read this thread for more details on this. But as I said, like I think it was a few weeks ago now when I was trying to like get my point across to you guys about regulation in general and about how I think that. Look, there's going to be shitty regulations in some parts of the world, such as this, and then there's going to be other regulations. In other parts of the world, there's going to be unenforceable ones like this one. How can you enforce this, right? Like, how are you going to, you're going to make it illegal for people to withdraw funds from centralized exchanges to their own crypto wallets? Well, what's going to happen is that all the exchanges are just going to move overseas, and they're just going to allow their customers to do it from overseas. And it's so unenforceable, unpoliceable. It's so backwards and it's so like anti-innovation that it's just insane that these things happen, but they do, right? Like they can happen for numerous reasons. Maybe there's some politicians that are being lobbied by the existing system and being like, you need to shut this down, or maybe the politicians just have absolutely no idea what's going on in crypto and they just see the headlines and they only know it for the scams and the get rich quick stuff and they think, we need to heavily regulate this. That happens a lot. Don't get me wrong, guys. Like it's not a thing that it's a rare occurrence. It's actually a common occurrence. So there's a million reasons why this stuff can happen, and unfortunately it plays out like this, but at the same time, you need to kind of like dig deeper into this stuff as well. Like as Patrick says here, this was kind of like voted on and it's a draft that went through. It hasn't become law or anything yet in the EU. It's not like in a kind of like a quote unquote official regulation or anything just yet. And I think that it might go through if it ends up going through later in April or something like that. But definitely read the thread for more kind of, context here. But I just wanted to update you guys on that and where that's going there. As I said, this is unenforceable, unpoliceable. It's anti-innovation. It is really, really stupid. It's going to get challenged in the courts. It's a losing proposition, really. It just these sorts of things are just a waste of time at the end of the day, because I look at this and I'm like, how much time is now being wasted thinking about this, covering this, having to fight this, just because some politicians either don't understand what they're kind of, voting on, or trying to push through, or they're just in the money of, oh, sorry, they're in the pocket of the existing industries. Which, I mean, both things play there. Or maybe they just hate crypto in general, right? There's that aspect to it as well. But definitely check out this thread. I'll link it in the YouTube description for you to do so. All right, so the Ethereum.org website has a new layer 2 section, which is absolutely awesome. I mean, guys, like as I said to you, I think yesterday or the day before, Ethereum.org is like the one-stop shop resource now for everything you need to know about Ethereum at this point. And here's a layer 2 page for you to kind of like dig in deeper with everything layer 2. Obviously, L2Beat is already out there, and that's an incredible resource, but this is just another one for you to dig your teeth into. Now, you could spend so much time on this. I mean, look at this. Like, you're scrolling down, there's links to everything. More on ZK Rollup. Like, go to Optimistic Rollups, ZK Rollups. Here are the pages. Read all about Optimistic Rollups. Have links to everything else. Like, look at the amount of links that are here. Same with Zero Knowledge Rollups, pros, cons. I mean, there is so much here, guys. Like, this is an awesome resource, and I'm sure they're going to keep updating it. You can explore all the current kind of like generalized layer 2s, as specific layer 2s, side chains, Validiums, alternative blockchains, all this sort of stuff here. So very, very cool to see this. I'll link this in the YouTube description below. You can go check it out. And actually, I just noticed this. There's actually a how to get onto a layer 2 section as well, where you can kind of like select from this drop down menu if you want to go to Optimism. It'll link you to the Optimism bridge. You want to go to Arbitrum 1, it'll link you to the Arbitrum bridge. That is really cool. And getting funds off of an exchange as well, onto a layer 2, they kind of list the supported exchanges here. That's actually a really cool feature. So kudos to the Ethereum.org team for putting this out. It's very, very cool. All right, so Eduardo here from the DAppNode team has shared an update that they've pushed to kind of like the DAppNode software here, where basically you can change your ETH2 client or validator on the fly here, or the one that kind of like listens to requests from. So you can see here in the video that they're going from Lighthouse to Prism in a click of a button. They're going update here. It's kind of funny that they've gone from Lighthouse to Prism when we've been trying to get everyone off Prism because it's the majority client. But obviously you can go from any client to any client here, which is very, very, very cool. I wrote the Daily Gwei newsletter about this today and about how we need to really make Ethereum staking much more simple, but not only staking your ETH, but also doing everything got to do with kind of like staking your ETH, such as managing your validators and beacon nodes, being able to change your kind of like client on the fly without having to go through all the complicated stuff and be at risk of slashing, protecting yourself from being slashed, maybe if you want to set up redundant setups and stuff like that. There's a lot that goes into this. I think that as long as we can make it super easy for people to stake their ETH, whether it's on their own or through a pool in a decentralized way, we've done enough. But as people will say, okay, well, it's already really easy to stake with Rocket Pool or with Lido, and I kind of like say, okay, yeah, I mean, it is to an extent, like if you don't have 32 ETH. And if you have 32 ETH, it's actually not that easy to stake on your own. You can either do it from scratch, which means you're setting up your own hardware, setting up all their own software, or you can do it using something like DAppNode, which is actually pretty easy. But I say easy, when I say like dead simple, I mean like click of a button sort of thing. And that's basically what centralized exchanges offer. And that's why they're so popular, because they'll just have a button. All a user has to do is click it, and their ETH is staked, essentially. Everything happens in the background. Now, I don't know if we can get to that point for solo staking. I don't think we can, because solo staking is definitely more involved. Like there are things you have to do as a solo staker to get into staking that are just unavoidable. You can't have a one-click thing there. But if you have 32 ETH to stake, I would assume that you would be wanting to stake it on your own instead of going into a pool, and you'd be putting up with the little bit more work you have to put in order to stake. Now, we can make that whole process easier, mind you. It doesn't have to be all command line. We can make nice graphical user interfaces, things like that. But if you have less than 32 ETH, even getting into Rocket Pool or Lido with STETH or RETH, that's still not dead simple. Like, I think the simplest way it could be is if you had like a centralized exchange integration with it, where people could just buy RETH or STETH on a centralized exchange. That would be like with fiat. That would be the simplest way. But there are other ways to do it, like I know Argent, the wallet supports it. But again, Argent is very simple to use, but it has a much lower customer base right now, and it is also I guess like I don't know. It might be harder to use for some people, or they might not trust it as much as something like a Coinbase, for example. So anyway, there's a lot of work to do here. The ETH staking industry is going to be massive, guys. I don't think people have really digested how big this industry is going to be. We're going to see a lot of ETH staked. I mean, the validator queue leading up to the merge now is already, still at 12,000. There are still lots of ETH being staked each day because I think people finally clued into the fact that, the merge is coming, and that means yields are going to spike up a little bit there, and you're going to be, obviously earning more ETH, and ETH's going to be really bullish going into the merge. I think just more and more people have woken up to staking their ETH, and that validator queue right now is, 12,000 validators, that puts the queue at, what is it, like 2 weeks or something like that, if I'm doing my head math correctly. Then that means, like, if you were to put in your ETH today, you would have to wait 2 weeks to get your validator active and to start earning rewards. So, yeah, I feel like, even if there isn't a validator queue, there's going to be tens of millions of ETH staked. There's already over 10 million ETH staked. I feel like we're going to teleport to 20 million ETH leading up to the merge. And then after that, if the rates, the staking rates are over 10% or something like that, because the fee revenue, the unburnt fee revenue is quite high, and maybe MEV and stuff like that, we're going to see a flood of ETH coming, guys. Like, I could actually see 30 million ETH staked within the next year or so, to be honest. But we'll have to see. It depends on the ETH price as well. Look, if we go really bullish, imagine ETH going to like $20,000 and then you wanted to stake with 32 ETH. That's a lot of money, right? That's $640,000 just to stake on your own. So when you think about it that way, it gets quite crazy. But we'll have to see what happens. But cool for Dapnode to make it just really easy to switch clients here, which obviously is very, very good for client diversity. All right, another banger thread from Pseudotheos today talking about how he believes that cross-chain is a technological dead end. Either the future is mostly secured on Ethereum with rollups or multi-chain. A long but worthwhile thread. Now, it is a long thread here. Basically, Pseudotheos going through why they think cross-chain is not the future and is a technological dead end, why it's insecure. Very similar to Vitalik's blog post about this that a lot of people have shared, and I'm sure you've read it at this point, and how kind of like the future is probably going to be mostly secured on Ethereum with rollups or multi-chain. Now, I totally agree with this. I think that rollups today with their bridges and everything aren't where we want them to be. Obviously, they've still got centralized controls in them in place and stuff like that. But once they haven't, once they're in their kind of like steady state and their end state, they are much better than these really shitty bridges that we have going to other ecosystems in a cross-chain way. They are much more secure. They're much easier to reason about. And I've talked about this a lot in the past. And I think that, look, as much as I think that the cross-chain stuff might be a technological dead end, there are still going to be people that use this stuff. There's still going to be ecosystems that form that aren't secured by Ethereum. And I think that's okay as long as the risks are understood. Arjun here from Connext has been a big kind of proponent of this, and he wrote a blog post today about optimistic bridges and what he's calling a new paradigm for cross-chain communication. So he thinks it's, cross-chain communication can actually be done in a secure way, and he's obviously building a protocol around that with Connext. I definitely recommend reading this blog post for a different take as opposed to what Pseudotheos and maybe Vitalik was arguing, because it's always good to get both sides of the argument. But for me as well, like, it's not just the bridge thing. When I say that I believe the future is going to be basically Ethereum with rollups, it's also a scalability thing, because as I've explained to you guys before, I believe the modular way to scale a blockchain is the best way forward, and I believe that Ethereum is basically at the forefront there in terms of having, I guess, like the demand, right, to use its block space, having the community, having all the smartest people working on this sort of stuff, and also having the roll-ups maturing at a rapid rate that are all based on Ethereum right now. And I just think that they're going to win just based on having better technology at the end of the day than these monolithic chains. And cross-chain and also cross-chain is it's harder to reason about, and it's also the fact that it's less composable. Like, Polynar goes on about this a lot, but when we're in the steady state, when we have like dank sharding and blob carrying transactions, and we can share state between the rollups through dank sharding, you basically have a multi-chain world, but you have them sharing state, which means they can actually compose with each other and talk to each other and interoperate with each other with relative ease. And you don't get that from cross-chain. Cross-chain is actually much harder to do. I know there's other projects like Layer Zero focusing on this, but they've got a lot of big promises, and we're going to have to see if that pans out. But from what I've seen from the smart people that I follow, they think Layer Zero's approach is interesting, but also it may not be enough to kind of like get rid of all that complexity that we're used to in the cross-chain world. So we're going to have to see how it plays out. This is not something that's going to happen overnight. I think we'll see this play out over the next few years to see who's right and who's kind of like thesis was right, and in the steady state. Like, bridge hacks right now, I don't think are enough proof to prove the fact that cross-chain is necessarily like maybe a dead end or completely kind of out of the realm of possibility of getting adoption, because these bridge hacks can happen to layer 2s as well. Because for example, if a rollups keys were compromised, right, the centralized keys that the team owns were compromised, well, then the same thing could happen if that function existed. So I mean, as I said, in the steady state, roll up bridges in theory and in practice should be more secure than a cross chain bridge, but we're not there for most of these things today. So something to keep in mind. Definitely read Pseudotheos' thread and Arjun's blog post. I'll link them both in the YouTube description. So Polynomial Protocol announced today that they have launched Polynomial Earn on Optimism mainnet, which is built on Lyra Finance and Synthetix. Synthetix has had a renaissance lately, guys. I don't know if you have noticed, not just the price of the SNX token, but the whole ecosystem there on Optimism seems to be doing very, very well. And it's awesome to see because of the fact that Synthetix didn't do very well for a long time because they were limited by layer 1, right? The scalability really hurt them. But now they're on layer 2 and they don't have to worry about that anymore. They've got like lots of scale. It's really cheap to do everything on there. And there's a lot of projects building on Synthetix right now. So just really cool to see this. But what Polynomial launched today with Polynomial Earn is it's the first DeFi options vault project to execute on-chain via an AMM, all with the speed and cheap transactions powered by Optimism. So today they launched SETH covered call and cash secured put selling vaults with a cap of 300 SETH and 1 million SUSD respectively. And starting this Friday, the vaults will start selling options directly to Lyra Finance AMM in batches. So it's all composable within the Synthetix ecosystem here. This is really cool. I think this was the original Synthetix vision and the original vision Kane had. And as I said, it just couldn't play out on layer 1, but we're seeing it play out on layer 2. So I'm very bullish on the Synthetix ecosystem, guys, and obviously the Optimism ecosystem. But I think that it's really proving to people that DeFi, or a lot of DeFi, was limited by layer 1, and once it starts to get going on layer 2, and once people actually realize that these things are super cheap to interact with now compared to a layer 1 Ethereum, really magical things are going to happen. And I've spoken about this before, where I said that there were just a lot of things that were not possible on layer 1 due to both the costs and the speed. I mean, the fastest transaction you can do on layer 1 is in 1 Ethereum block in 13 seconds, right? The fastest transaction you do on a layer 2, I mean, it's already about 1 second, but apparently Arbitrum Nitro, they're promising even faster than that, and I'm sure Optimism has speed improvements up their sleeve as well. It's basically instant. So when you take all that into account, it's no wonder that these things like Synthetix and other apps are kind of like having a bit of a renaissance here. And I hope to see this continue for other DeFi apps out there. So definitely go check out Polynomial Protocol here and with their new Earn feature. It'll be linked in the YouTube description. So I missed this the other day, but Balancer have announced that they've got a new VeBAL token, which is live, and the new VeBAL governance system has also kicked off. So this is following on from a lot of these kind of like VE token schemes that I think Curve Pioneer, and there was a bunch of others out there that have been doing this, and basically a way to, I guess, lock up the kind of like tokens and basically drive more value to the token and have more participation in governance as well. So you can read the thread for a description here and read the blog post for a deeper dive. But basically what BAL holders can do is lock their BAL to receive VeBAL and get a host of benefits such as long-term alignment with the Balancer protocol users, fully automated BAL minting, protocol revenue distribution, and plug-and-play compatibility with Curve's ecosystem. So more details are available in the blog post on this. But yeah, if you're a BAL holder, you should definitely be checking this out. I think the funny thing is about a lot of these VE tokens is that it doesn't make much sense. If you plan to hold them for like a year or 2 years, it doesn't make any sense for you not to lock for that long. Like if you've actually said to yourself, okay, I'm going to hold this for at least a year, and I'm not even going to think about selling it, well, then you should lock it up. I think the problem becomes when people start locking up these things and then they go down like 90%, and then they're like, oh, I didn't plan to hold it for this long, and now I can't sell. So yeah, there's always the kind of like trade-off there. You get the benefits, but I mean, some of these tokens like have gone down a lot, maybe since you locked them and you kind of like locked into a position here. But if you do believe in Balancer is a great project, and if you do believe that BAL is going to go up in value, then it makes sense for you to lock it here. So, I mean, not investment advice, guys, but yeah, definitely check out this blog post for a deeper dive on all that and how it all works. All right, so a big announcement out of Maker today. So the first real estate deal from 6S Capital LLC with Tesla involving a DAI loan through a Maker Vault to fund the project. So I think what's happening here is that Tesla is basically, as Toucan Spam says here, Tesla's renting this real estate, which was originally purchased via a DAI loan through Maker. So this is cool. I mean, like it's really cool because we're blending the real world with kind of like the crypto world right now. I mean, Maker's been a pioneer here of this. They've been wanting to do this for quite a while, blending in real world assets into DeFi protocols. Obviously, there are things that need to be worked out before these things can be done like at scale. Obviously, like how do you secure the real world asset because it's still secured by the contracts in the real world, right? And then you have to kind of like have it in the contract that says that this is going on in DeFi with it, blah blah blah. But there are people working on this, there are organizations working on this, and it's really cool to see it just out in the wild. And it's really cool to see that Tesla's basically the tenant here, from what I understand. So yeah, it says here Tesla as a tenant, as a collision center. This $7.8 million closing was financed by 6S Capital Partners with a Series A, and they closed the deal, repaid the loan, and sold the project to an investor with an expected exit cap rate. So they've actually repaid the loan, from what I understand, as well, after buying this real estate. Very, very cool. I think we're going to see more of this as time goes on, for sure. As I said, scaling it is kind of hard, but I think if anyone's going to do it, it's going to be Maker. The thing about Maker is that they're such a core and important protocol of Ethereum DeFi, but they don't get much attention or love because the MKR token doesn't really do anything. And I mean, I get it, but at the same time, like, regardless of what the token's doing, you should definitely be paying attention to what Maker's doing as a project, how they're kind of like pushing DeFi forward, especially with real world assets and things like that. All right, so ETH Global has announced the 12 LF Grow finalists here. So there's a thread here of all the projects and kind of like what they are. I haven't had a chance to go through them just yet, but they look quite cool here. So there's projects like Mad Finance, which is basically, I mean, the LF Grow hackathon was for Web3 protocols, guys. So you're going to see a lot of Web3 stuff here. This is Mad Finance, which is a lens reference module that enables real-time monetization of your content. So kind of like as blending DeFi and Web3 there. There's Iris here, which is a messenger of the gods. Twitter, X Patreon, X Twitch, X TikTok, built on Lens. So Lens protocol being the protocol out of Aave for decentralized social media that I've talked about before. Lens collect auctions, run Dutch, decreasing, and English, increasing bids auctions for collecting Lens posts. I mean, this is really cool, guys. Like, I'm pretty sure all of these were built on Lens from what I can see, or at least most of them were. But I definitely recommend checking out checking out this thread and kind of like reading through each of these projects and checking them out yourself and going and using them, because these hackathons usually give birth to the next billion-dollar protocol. So if you want to see what's coming down the pipeline, if you want to be ahead of the curve when it comes to what projects are actually going to be, coming to Ethereum, other than maybe DeFi projects, but more specifically in the Web3 space, you should definitely pay attention to ETH Global finalists and just people building in ETH Global in general. So definitely check this out. So Element Finance today have announced the launch of the Element DAO and the distribution of their Alfie token. So claiming will go live at the Ethereum block name number 14,496,292 at approximately 4 p.m. ET. Now, I don't know what the current block number of Ethereum is. I don't know if we're at that block number. Let me have a quick look for right now. Yeah, we've actually passed that block number. So claiming has already gone live. I don't believe the tokens are liquid yet. You can't trade them or anything. But if you were part of the initial airdrop, you can claim it. And the first 2,000 claimants and that delegated their voting power was actually able to mint the Alfieverse NFTs that I covered the other day as well. So very, very cool to see this. And I should disclose here, guys, I'm an investor in Element Finance as part of their last round, their Series A. So I don't have my tokens or anything. They're all vested and stuff like that, but I just wanted to disclose that there for you guys. But, I mean, you guys know I've been a big fan of the Element Finance project for a while now. I actually really like the way that they're handling their DAO and how they're kind of going about it, which you can read more about in this blog post if you want to kind of learn how they're doing it with like a governance steering committee and kind of like having a council and just basically doing it right from day one. I think a lot of projects think of DAOs as kind of like it's something they can deal with later, an afterthought, when in reality it should be something that you're thinking about from the very, very start, especially if you're kind of like going to be governed by token holders, because you need to make sure that you build a really healthy and sustainable community from the start. You need to make sure that your token distribution is healthy and sustainable, and you need to make sure that you have good governance participation for your DAO to actually work. So cool to see this. Definitely give this blog post a read. I'll link it in the YouTube description. All right, finally here we have another thread from Trent Van Epps, this time talking about rewards and penalties in Ethereum proof of stake. There's more than just slashing. Now, I've spoken about this before, guys. There's slashing, there's inactivity leaks, there's inactivity being the offline kind of like leaks. There are kind of like different levels of kind of, I guess, like leaks, depending on if most of the network is offline, you're going to lose more than if just you are offline. And same goes with slashing. And then when it comes to rewards, you actually get like a bigger reward the more kind of like the better your validator is doing. So if your validator is getting the information out the fastest it can, if it's got like 95+%, I think 95+% efficiency, I should say, then you'll get the full reward, I believe. And there's a bunch of more information from Trent here as well. You should definitely check out this thread. But also, people get rewards for whistleblowing as well, as part of kind of like slashing and things like that. So yeah, this is really good. I mean, the funny thing about Ethereum proof of stake is that it's actually a complex system in that there's a lot of moving parts to it, but it's very elegant in its design. And if you want to learn more about it, about the rewards and penalties, this is the thread to read. But you can go deep with this sort of stuff. And this is why I'm looking forward to fully reading Ben Edgington's kind of like book that he's doing on the Beacon Chain, because there's so much that goes into it. Like, as I said, guys, this was like the Beacon Chain is a result of so many years of research and development, and not just research and development for the sake of it, but trying to build something that is a truly decentralized, sustainable, healthy proof of stake protocol, not just at the technical level, but at the social level as well. And that's what gets me most excited about Ethereum, to be honest, guys. Like that kind of dedication to the core protocol really does breed greatness, extra protocol, whether that be at layer 2, whether that be within DeFi, NFTs, Web3, the community in general, anything at the end of the day. I think that as long, the fact that we have it coming from like the ground up, the fact that it's kind of like a bottoms up approach instead of a top-down approach is very, very healthy. But I'll link this thread in the YouTube description for you to check out. And I think that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks, everyone.